The ADP report came out this morning and showed that 198,000 jobs were added to the private sector. So you may be thinking that that's why this market is up. Well, no, that's not the case. I'm here with Mark Newton from Greywolf Equities. Now, Mark is telling me that it is a result of shorts being squeezed and carry on from yesterday's record highs. So here we are again, Mark. You know, so it isn't euphoria over these jobs.
It's tough to pinpoint the ebb and flow of stocks based on economic numbers on a day-to-day basis. It really is difficult. I mean, economic numbers and earnings tend to follow stocks, and sentiment in general drives rallies. It's not, you know, the economic numbers on a day-to-day basis. I mean, yesterday was a pretty big achievement. It is mildly positive that the Dow and the utilities now have joined the transports and moving to new highs. So for all the Dow theorists out there, yes, it's nice to erase this negative divergence, and now all the indices are at new high territory. However, there's still a lot of negatives that, you know, I talked about with you a few weeks ago that are still very much in place. And the fact that the market is still quite overbought. You have over 82% of MYIC stocks above their 200-day moving average. What does that mean? Well, the upside likely is not going to prove as robust as what people think. We've already made a big move over the last 4 years. Momentum has gradually gotten less and less on this move. Volume has been waning for 2 years. You know, investors suffered two of the biggest bear markets in history, and so you continue to see that, along with program trading, has driven down volume.
All right, but volume, we're still at a point that we're fairly high. You know, we've had a lot of people saying, you don't need to be in this market, stay out of this market, and if people did, they would have missed all that.
Typically, you want to see volume confirm a move to new highs. It hasn't done that. Yesterday's volume was abysmal. It was probably it's dropped consecutively over the last 4 days. That's not a good sign. You want to see breadth and volume expand.
But you could argue that
very optimistic in the last few months, as would be expected. The market's up 13% in 3 months. It's up 8% year to date. Sentiment gradually follows. Now that people think the Fed is going to be there to save us all with this comfort net, right? So that's only going to help to embolden the people involved with this rally and thinking we can continue indefinitely. But it's going to be the perception of when the Fed stops is when really is going to be the concern, more so than when they actually stop you know, buying mortgage backs and treasuries at a tune of $85 billion a month.
All right, so we have not seen, I guess, the big PMs in this move. We've seen the retail investor. They're clearly helping this move out. So we don't want to completely negate their effect. I guess the question is listen, you're a chart guy. You look at charts. Right. You look for patterns. You've seen this before. You've seen us hit market tops before. What happens traditionally when this happens?
Typically, you need to see all the indices go to new highs to get everybody on board, in the words of Druckenmiller, to get all the lobsters in the pot, right? And we're starting to see that. People have not been enthusiastic about stocks until just recently, and now everybody's saying Dow 14,000, now the markets are at new highs, S&P 1500, and you definitely feel an aura of energy, of people getting involved at what I think is going to prove historically and similar to other years to be the wrong time. Does this mean the market goes down right away? No. The market at new highs, we likely do have a little bit to follow through. I would advise not to be overly complacent. In the past 3 years, the market's peaked in March and April. This year feels like the sentiment is starting to get frothy again. People are concerned. There's been a lot of people on the sidelines for a lot of good reasons, right? Lack of job creation. The numbers today potentially, you know, along with other numbers, gradually giving people a sense of comfort. However, look at what the sequester, everybody was worried about the effects of the sequester, and now the Dow is at new highs, right? So there have been a lot of PMs on the sidelines worrying about the effects of debt, and now the market's moving on, and people are scratching their heads, what do I do now? You have to be cautiously invested, but diversified also.
All right, well, there you have it. That's Mark's take. So it sounds like things could be okay for the next month or two, but then it sounds like he's saying, be ready, be prepared that you may have to write those sell tickets maybe within the next, you know, weeks, several weeks or so. So keep that on your docket, those sell tickets. That's Mark Newton from Greywolf, and I'm Debra Borchardt with TheStreet.